2 weeks ago, Nvidia was the hot topic, but is their stock performance really a surprise? From humble beginnings to becoming a powerhouse in the world of graphics processing, Nvidia is the type of company that knew how to understand the market and innovate to anticipate their customers' needs. We dove into Nvidia's history to understand the company's trajectory and to see its possibilities for the future. By the way, if you are new here, I'm Josh with Visual Sectors, and our goal is to gather data and help you use it to make better investment decisions. Nvidia was founded in 1993 by three visionaries, Jensen Huang, Chris Malachowski, and Curtis Preem. Their mission? To democratize 3D graphics and make SGI-level graphics accessible on PCs. With the support of the CEO of LSI Logic, they convinced Don Valentine of Sequoia Capital to invest $2 million in a $6 million valuation, followed by an additional $18 million. Not too bad for a first year, right? In 1995, they launched the NV1, a graphic processing unit, or GPU, primarily targeted at the PC gaming market. But despite its innovative features, the NV1 failed to succeed. The reason? An incompatibility with existing graphic standards like OpenGL or Direct3D that caused performance and software issues. Nevertheless, the NV1 represented an important milestone in Nvidia's history and allowed them to redirect their focus on developing subsequent GPU products that would address the shortcomings encountered. Their big breakthrough happened in 1998 and 1999 with the market launch of the Riva TNT and the GeForce 256 the following year. The GeForce, in particular, set new standards for graphic performances. The Nvidia GPU quickly gained popularity amongst gamers, establishing the company as a dominant player in that field. At the same time, on January 22nd, 1999, Nvidia IPO'd. Highly anticipated, the stock opened at $12 per share and closed at $20.88, earning over $50 million for the company. With its positioning in high-end gaming and new financial stability, Nvidia started exploring new markets. The 2000s saw the Quadro series, designed for engineers, designers, and visual computing professionals. The Tegra mobile processor, which explored the mobile computing market, the computing platform, and programming model CUDA, and the Tesla series, designed for high-performance computing. Impressive, right? But if there was a market that evolved more than the others in the 2000s and 2010s, it was the tech one. To maintain its position in that market, Nvidia had not only to keep up with its customers' evolving needs, but also to invest very early on in R&D and technologies that could be used years later. So let's imagine you are Nvidia. You have very good GPUs that can process large datasets. You have a computing platform that can execute a wide range of computational tasks. And you have the same will to democratize access to powerful resources as you had at the beginning. What could you explore? Machine learning and AI, of course. With that strategic shift in the 2010s, Nvidia became a frontrunner in the ML and AI markets, always going further with its research to push back the limits of technology. Nvidia's expansion came from technology development and acquisitions. And if you are under the impression that you have never used a product using Nvidia technology, here's a list to prove you wrong. And no, we did not dare to list gamers in that list. You know what you're using. If you use an advanced driver assistance system, such as cameras, radars, or any other technology helping you detect roadblocks, if you had an MRI, a CT, or an ultrasound, they might have used Nvidia's GPU to analyze the images. If you had surgery, your surgeon might have used their medical robotic and surgical assistance device. If you have recently seen a movie using visual effects, they might have been using the CUDA computing platform. If you have used robo-advisors, peer-to-peer lending platforms, or blockchain solutions, they might be the results of the Nvidia FinTech Collaboration Program. We could say that Nvidia is everywhere, even in sectors we don't know how to use fully yet, such as autonomous driving systems, genomic medicine, or quantum computing. And with all of that, it's not a surprise to see Nvidia stock rising to its highest level, as we saw in this month of March 2024. So, is Nvidia stock going to climb forever? Or is there a limitation to that growth? To imagine a different scenario, We asked our team of experts how they could see Nvidia stocks evolving, and while I was expecting an answer full of numbers, they had another idea. According to them, Nvidia's trajectory looks a lot like another company we all know, Microsoft. And looking at what happened to Microsoft could tell us a lot about what will happen to Nvidia. Let's take a look. In 1975, Paul Allen and Bill Gates decided to launch a software company for the emerging personal computer market. They launched their first product under their contract with IBM. It was 10 years later, in 1985, that had a first breakthrough with the release of Microsoft 1.0, their first graphical user interface operating system. Due to a lack of software support, some compatibility issues, and limited functionalities, the launch of Microsoft 1.0 was lukewarm. Far from being discouraged, Paul Allen and Bill Gates continued to develop several versions of Microsoft, using their previous shortcomings as improvement guidelines. Okay, I'm starting to see the similarities. In the 90s, Microsoft decided to broaden their products and launched their well-known productivity suite, but also a web browser, Internet Explorer, software solutions for business, such as SharePoint or Azure, and even ventured into the gaming world with the launch of the Xbox. In addition, they invested in other projects, such as web services, MSN or Hotmail, and programming languages, Visual Basic or C++, and acquired the up-and-coming companies LinkedIn, GitHub, and Skype, before investing a large part of their R&D into cloud computing. So, we have two companies with the same trajectories, but 20 years of difference. They all had a slow start with a specific technology, found their positioning on the market, and expanded into various industries before focusing their research on a technology that was not yet present on the market. We know that Microsoft stocks have had some ups and downs, but always delivered returns to investors. Would it be safe to say that Nvidia is taking the same path? Well, not that quick. We dug further and asked our chief analyst, Brian Tancock, to conduct research with his team and to explain to us what he thought could happen.
There's a lot of debate right now about how to value Nvidia's stock given this period of extraordinary growth. The approach we took is called a comparable company analysis. In this, you use the growth metrics from a similar company plus your own set of assumptions to produce a range of values for your target. For our first set of assumptions, we'll assume that Nvidia is currently at the end of its own 5-year breakout growth period, meaning we'll value it today from roughly where Microsoft was in the year 2000. For this one-stage model, we'll use a relative steady growth rate of 12.2% for the next 10 years, followed by a terminal growth rate of 9.9%. This first set of assumptions produces a fair value on the stock of $611, meaning it's currently trading at a 50% premium to fair value. For our second scenario, we'll assume Nvidia is only 3 years into its 5-year breakout growth pattern. For this valuation, we'll use a two-stage growth model and directly apply Microsoft's hypergrowth and steady growth rates to Nvidia today. This approach produces a fair value of $692 a share, meaning Nvidia is still overvalued by roughly 34%. Finally, for our last scenario, we'll again assume that Nvidia is only 3 years into its 5-year breakout pattern, but this time we'll apply scaled growth rates of 53% and 12.2% into our two-stage growth model. With this approach, we get a fair value for Nvidia's stock of $1,264 a share, meaning it's still trading at roughly a 35% discount to fair value. But of course, all of these scenarios just provide an indication of what could happen. Right now, AI is still very much in the gray area, where regulation and possible legislation are still being discussed. And the emergence of such technology presents a big challenge to leaders who are tasked with ensuring public safety. Therefore, these valuation scenarios are only relevant given amiable regulation and no outside limitations on Nvidia's future growth.
Thank you, Brian. I think we can all agree that Nvidia seems to be the company to follow in the next few years. More than their promising financial outlooks, their mission-driven product development strategy holds out the will to impact our lives on a daily basis. If you are curious about their day-to-day data, you can find a direct link to our website. Right now, you can benefit from a 7-day free trial by clicking the link in the description. And if you want daily financial news and opinions on stocks, follow us on Instagram. We post twice a day. Next week, we will talk about earnings. Don't forget to subscribe because you don't want to miss it. See you next time.